Well, welcome to Closing Bell. Starting the show slightly early, of course, because the markets have seen a bit of a slam dunk. 255 points down on the Nifty, 13,982. Let's see if we can reclaim 14,000. The Bank Nifty fell almost 1,000 points, 30,300 right now on the Bank Nifty. And this is an index where we have broken the 50-day moving average. This is the first actual test of the 50-day moving average on the Bank Nifty. And Bank Nifty had been, trying to show some resilience at least on Monday, but today that's caved in. And look at India VIX, that's up about 5%. Surabhi is joining me. Surabhi, hi, good afternoon.
Good afternoon, Anuj. Yeah, really, and sort of an all-encompassing sell-off, isn't it? Because we've been making this point for the last couple of days that the sell-off is more apparent in India. Even today, if you look at how Asia closed out or how European markets are doing at the moment, this is a much, much bigger decline. So, Anuj, of course, we'll talk about the immediate movers and shakers in today's fall, but I wanted to get a broader sense from you. 4 back-to-back days of serious fall, which we can't ignore. Yeah. Is this just nerves? Is it maybe STT or LTCG? Let's not forget the super rich. I mean, there's this constant always fear that the surcharge might be increased or something of that sort. Is it just that, the nervousness?
You should never speculate ahead of such a big event, and look, it's easy to blame it on some pre-budget nervousness, or, you can say that, does the smart money know something? Because, all of a sudden, FIs and DIs both have turned on the sell side. All of a sudden that's happened, Surabhi, right? Over the last 3 or 4 days. Before that, at least FIs were on buy side. And then from all of a sudden being 3,000, 4,000 crore buy numbers, we've started to see sell numbers. And big stocks are falling. By the way, Reliance, for example, has today done 3,000 crores of turnover. So, almost 1,500 crores perhaps could be marked for delivery. Look at Tata Motors' volumes today. And I think this is a stock which had perhaps gone up too fast and too much, so there it is. You're seeing a decline there. HDFC Bank has seen some very heavy volumes. Kotak has seen. If you see the volume chart, you would notice that the top 6, 7 moves are on the downside, and that too big numbers. The price to volume action today is telling you that there's some selling. But I tell you what, let's do one thing. Let's go across to Nimesh as well to see what has he picked up, and then we'll resume our conversation as well. Nimesh, what have you picked up? It's a 1,000-point decline on the Bank Nifty as we speak.
Hi, Anuj. So, everybody's been talking about FI flows and the fact that there were a lot of warning signs. But look at the FI numbers first. On Monday, there was an FI sell figure despite there was an MSCI inflow of $170 million. So that was a clear indication that at higher levels, even FIs were looking to sell this market. Look at emerging markets as well. For the month of January, both Korea and Taiwan have turned net negative as far as the FI flows are concerned. In terms of emerging markets, India is the only market which is still seeing a $3 billion of FI net buying. Only in the last couple of days, we are seeing net selling from FIs, and we've seen a 5% correction from the top. In fact, there were a couple of reports as well last week. CLSA did write a big note saying that there are signs of market picking out now, and January to March is a month where you normally see weakness and a bit of correction as well. So they had written a note. Even Goldman Sachs had written a note last week saying that, well, they are bullish on emerging markets and they feel it's a cusp of a bull market, but within that, you will see some corrections in the month of January and February. So there were signs of a lot of brokerages writing about it. Now it seems it's action from the FIs as well. So that is something to track very, very closely. And remember, even from a markets point of view, most of the HNIs, super HNIs, were net long in the market heading into the budget. So that's also unwinding. And that's putting pressure as well in the market, at least in the large cap names. So that's something which I've picked up from the dealing room as well. That no doubt there is this FI flows have turned negative and have slowed down, but there is a lot of unwinding pressure as well from the larger HNIs and super HNIs in the large cap names. So that's also playing out in today's market. So there is a bit of nervousness. Of course, we spoke about the budget concerns as well, but largely it looks like it's the FIs who've been net so positive. They have turned slight negative, and that's the kind of panic which is there in the market now, and it's playing out in the minds of HNIs and super HNIs as well.
Nimesh, thanks a lot for that. You know what, Surabhi, I'll tell you one thing. It was, I think, last week when I was telling Lata and Sonia about the India VIX, which had started to move up while the market was also going up. That was, I think, the first warning sign. Because that normally happens when there's something which the market is sniffing. And since that day, I think the market's taken a bit of a turn for the worse. And I think that India VIX is a big indicator, in the past as well. This is one index which always, bottoms out or tops out first. When it bottoms out, the market tops out. When it tops out, the market bottoms out. It's happened. I mean, if you see on the screen as well, it clearly bottomed out ahead of the market peaking out. So that's why it's an important indicator. Sanjay Dutt is joining us now, Director of Quantum Securities. Sanjay, good afternoon. Thanks for joining us at this short notice. What to your mind is impacting the market? Is it just pre-budget nervousness or the fact that the market has just run up too much?
No, I think it's got nothing to do with the budget or anything local. If you look around, most of the EMs and many of the Asian markets sold off yesterday. Concerns are once again coming up. Of course, all these issues are post facto, and we can always label the correction because of whatever we may find that's negative at the moment. But markets are run up quite a bit. Most of the EMs are cooling off. Some of the Asian markets, even China, cooled off yesterday. This is all a part of that, and we are obviously selling here is magnified because we had gone up very fast. A lot of pivotals had extended beyond earnings, so liquidity only could not just keep taking them up. Most investors, global investors, particularly institutional investors, are realizing that they need to take things off the table. And we are part of the same cycle that happened yesterday. That was what we saw in the Hang Seng, what we saw. In fact, even today, quite a few Asian markets have been marginally negative or negative. So it's really got nothing got to do with domestic factors as such. Yes, we have a big event coming, but we can't really put it with the budget.
Speaking of big events, just a reminder to all our viewers that we'll get to hear from the Fed. I'm talking about the mother market. And there are big earnings as well. Tonight, we'll hear from Apple, from Facebook, and I think also Tesla. So let's see if there's a bigger move in the mother market itself, which can give us further cues and directions. Sanjay, good afternoon. Thanks for joining in. While I take your point that, this obviously sort of is perhaps part of some risk aversion coming in larger on account of emerging markets, what do you make of the way things are poised here? I mean, typically when you start seeing a fall like this is when people start talking about valuations and that argument's thrown out of the window when you're taking aim at 15,000. But, what do you think? Is this a good time to be getting in and buying?
No, I don't think so, because I think as far as the pivotals are concerned, most of the, particularly the stocks in the Nifty have run up quite a bit, are way beyond their long-term average in terms of valuations. I think we would need some amount of more selling off, or if not selling off, at least consolidation at these levels or maybe a little lower. So I don't think people should be looking into buy the pivotals as yet. There's a lot of froth in there, and I think it will take a little more time to correct. Now, of course, we may have these rebounds of 100-odd points tomorrow morning, and then again, we may close positive, but I think we have another week, 10 days of sell-off to continue. It will be patchy, spotty, but I don't think it's the time to buy at this point of time. Select mid-cap, select stocks where you have conviction. Those obviously you can buy if you're getting them at cheaper prices than what they were about a month back.
Now, take the point, Sanjay, about yesterday's trade. But, yesterday also the Asian markets did recover a bit, and today also most of them were in the green. So, there's clearly a bit of a hint of underperformance in our market, purely for last 4 or 5 days.
Yes, that's true, Anuj, because, our markets have a very narrow entry and exit door. So, when everyone's buying, same way the upside is magnified, and vice versa when selling comes in. In fact, when selling comes in, the exit door is much more narrower. In fact, it's not a door. In fact, it's a window. So everyone's wanting to jump out of the window at this point of time. It's part of the phenomena we've seen over the years, that when we sell off much larger than when we actually go up. Very rarely do we go up 2, 3 or 4% in a day, but when we sell off, we comfortably sell off 2% without any problem. This is the typical phenomena. The nature of the markets are what they are in India for various reasons. I think that's a long debate. That's exactly what we are seeing. But if you look at Hong Kong also yesterday, for instance, Hong Kong saw the worst sell-off over about 7 or 8 months, if I'm right, which wiped off nearly about $200 million of market cap.
Okay.
And that's exactly what you are probably seeing here. You may not have an absolute figure coming in very huge in the evening from FIs or domestic selling, but overall you'll see the market cap coming off quite a bit. It's typical of Indian markets.
Okay, Sanjay, while we've taken your point on board, you don't think this is entirely local in nature, but if we were just to speak of the budget for an instant, without getting speculative, in this 4-day fall, do you think the market has adequately priced in, if at all there were to be a googly, I mean, any negative tax googly, whether it's on capital market taxation or even, corporate or personal income tax?
No way. Market is not priced any googly that will come up with the budget. If a googly comes in the budget, I think in a matter of 2 or 3 days, you'll be down to sub 12,000 because people are still, reading into the financial statement that it's once in 100 years kind of a situation in the budget. So if there are big negatives that are going to come in, I think this sell-off will continue much deeper. And I won't be surprised if these 2,000 points get wiped out. If there are any negatives which are directly impacting the capital markets, like the long-term capital gains tax or anything of that sort. So let people not be in any kind of, misconception that this is kind of already factoring in the negatives that may come into the budget.
Yes, let's not speculate on that, but Sanjay, thanks a lot for joining us. Good talking to you. Let's move on then. The market is actually not stopping here. 13,950 is gone now. And this is how algos play out, Surabhi. Once you break important levels, 14,050 was that important level. And, if you see the slide, started steepening as soon as 14,050 was broken.
Yeah.
As soon as that 14,050 was gone, you added another 100 points on the Nifty in a matter of 10-15 minutes.
It's like a hot knife through butter. I mean, the way 100, 200, now 300 points on the index.
Yeah, this is machine trading, Surabhi. It works both ways. And we've seen the good of it, and you see the bad of it. And at the end of the day, if you get it right, you make money both ways. And that's what market should be. It should be both side moves and not just one way up. One way up market. Everyone becomes a hero. You can talk about any stock, and that stock is up next day. You feel good about yourself. A lot of stocks were going up because of the market. They were not going up because those stocks were good. And now you're seeing perhaps a bit of a reality check. I think in this market, finding winners would be something which would require perhaps some bit of skill set. But anyway, let's go across to Mitesh now for some closing strategies. Mitesh, good afternoon. Your thoughts on this brutal fall that we have seen, and what would be your stock calls now?
So, Anush, a couple of things. One, I think, I was suggesting that in case we start breaking below 14,150, we will see the decline kind of accelerate, head towards 13,800, 750 zone. So, I think we are in that process of, moving around to those levels. Having said that, I think this market now, unless until it recaptures those levels again, I think in the short term, and despite the fact that we have an event coming up, I think, 14,160, despite the fact that we have an event coming up, if 14,160 is not recaptured again, I think we will see more corrective moves coming. Of course, there will be throwbacks and pullbacks from lower levels. One such level is around 13,800, and then, we have even 13,575. So these are the two levels which I'm working with as the possible downside targets. The stock calls that I have right now, buy on UBL with a stop at 1265, targets of 1320, and a sell on Godrej Properties with a stop at 1302 for targets of 1250.
Okay, Mitesh, thanks a lot for those trading strategies. Just look at some stocks. Intraday, just pull out Kotak Mahindra Bank's intraday chart. Now, the reason I want to specify Kotak Mahindra Bank is because it's post the numbers, you saw that decline yesterday. Today in the morning, it tried to sort of recover, and it tried to sort of go above 1,800. But after that, look at the kind of selling that it's seen. And if you put out a slightly longer chart of Kotak Mahindra Bank, it's fallen 12% this month. Now, you could blame it on the fact that it had run up a lot after that MSCI factor. Post that MSCI news, it had a one-way rally from about 1,200 all the way up to 2,000. I think a 6-month chart or a 3-month chart would suffice here to show up. Just to point out. Now, if you are someone who bought Kotak Mahindra Bank 3 months back, you're okay. right? But if you're the one who chased momentum, or 6 months back, you're more than okay. You're 32% higher. But if you chase momentum, say last month, in some of these stocks, then you are in for some pain. Tata Motors. I mean, if you bought Tata Motors 300, you are really looking, staring down the barrel. But if you bought Tata Motors 6 months back when it was 130, 140, you're still okay. So this is where it, all boils down to when did you enter. I mean, if you look at this chart, you're very happy. But for someone who chased momentum at 300, that's the problem. Prakash Diwan is now joining us. Prakash, good afternoon. There's big selling in big banks. HDFC Bank is down 3.5%. ICICI is down 3%. Axis ahead of numbers is down. Kotak Mahindra Bank is down 2.5%. Is there anything that you picked up?
So, good afternoon, Anuj. I think it's, very clearly a sell-off that's across the board, especially in heavyweights. If you see, there is a sparkle or two here and there in the mid caps. And what the market seems to be doing is that it's using these good numbers and all the upside triggers having come together to actually pare down on valuations and make it much more realistic. While the budget might not have set very high expectations, I don't even attribute too much of nervousness, because the market's probably seeming to be looking at this thing saying, let's sit on cash, get some cash in the portfolio. And we spoke about this on Monday morning. It would probably be better if you were to deploy all that cash post the budget once you know which sectors to look at. So for banking, I think the cat amongst the pigeon was set when the RBI kind of alerted the fact that they were not very okay with and this was about 20 days back, but the reaction takes time to kind of weave into the market when they were not very comfortable with the levels of the accounts that were availing of the moratorium benefit. And once that would come, there would be this whole spring effect of a lot of recognition of NPAs which would be required. Kotak has actually done more provisioning than they've done even in good quarters, I mean on quarters which were regular. And here you have a situation where everybody is very cautious or getting over cautious. So there is something which probably the 31st March deadline could probably throw up in unfavorable triggers, Anuj, on the banking side. And that's what some of the smaller banks also showed in the stress in the numbers on like Bandhan and all. So my sense is you'll probably have a little bit of caution coming in given the stretch valuations that we were at. So pretty normal. It's good for the market to correct actually, so that you get the real good place that you would need to kind of buy at more reasonable valuations.
Yeah, and we will talk about your shopping list for sure, Prakash. So you pull it out for us. We'll take a very quick break. The market, the fall isn't really stopping. Still 300 down on the Nifty. We'll take a break and then turn our eye on the earnings as well. Some of the big ones like Marico have already come in. We're still awaiting numbers from, of course, Axis Bank and Unilever, among others. Also United Spirits. So we'll get started with all the earnings previews and reviews in just a moment after the break. And a reminder, today our alpha manager on the show is Pankaj Tibrewal of Kotak Mutual Fund. He, of course, manages their mid-cap and small-cap fund. So we'll find out Pankaj's approach to this market now.